Time to check in with Amanda Lang, business reporter with BNN Bloomberg and host of Taking Stock, which you, by the way, can hear across the Iheart Radio network. Amanda, it's been quite a tumultuous week, as they say in markets. And of course, typically we might look at the U.S. and go, well, it's a U.S. market. But this time, really, it was global markets. Canada was not immune. We had a $1,000 or 1,000 point drop, rather, on the Dow one day, followed by an 800 gain the next day. So the easy question is, what's going on?
There was a lot of nervousness, and as you note, you can get whiplash if you pay too close attention. A lot of Canadians would have been lucky in the sense that it happened on a day when they were, had their feet in a lake somewhere, so they didn't pay attention. The markets got very spooked by U.S. unemployment data last Friday that was very weak, just concern that maybe there's a recession headed our way in the U.S. and that the U.S. central bank has missed the mark on when it should start lowering rates. All of that factored into general nervousness. I mean, what I would say, Aaron, is these markets are very fully valued. And when I say markets, that's especially true of parts of the markets. As you know, a handful of tech stocks dominate. And so it's pretty easy to see them sell off. But this was global. It was $6 trillion in value by the end of that trading day. And then it bounced back. So look away, get your portfolio in order, have your long-term goals set, and don't pay attention to these kinds of swings because there's probably going to be a lot more volatility actually in the short term.
Yeah, take some days not to even bother looking at it because 3 days later the whole thing could have turned around, which is in essence what has happened here. All right, closer to home, we had unemployment numbers come out today. So Canada's employment rate stays where it was, but the problem is, so we're at 6.4%, but the economy shed 2,800 jobs, and from what I'm trying to read here, what I'm seeing, it looks like jobless rates for young people continue to rise, and that's a bad sign. So I have a two-part question here. With respect to unemployment, the trajectory here doesn't look good. And secondly, does this conceivably affect what the Bank of Canada decides to do rate-wise?
So I would say, to start with your second question first, it locks us into a cut in September, with one caveat that I'll throw out. But as you note, the numbers were basically flat. Statistically, a couple of thousand jobs is nothing. The unemployment rate stays the same. Actually, it was expected to rise. So you could say it's kind of a neutral number. But you've identified one weak place, which is youth unemployment continued to climb. And I would say another place that's not great is that there were a lot of jobs lost in the private sector, many more than in the public sector. So we don't want that. We want the private sector to be where we see job growth and creation. So take that combo and you would say, okay, that's weakness. So the bank needs to help the economy by cutting rates. The only thing is, Aaron, in the data, we see wages still up 5%. And that is an inflationary number. And those tend to be multi-year, right? If you've locked into a contract for 3 years, that is 5% inflation for your company. So what the bank does with that in the face of the weakness is the question, because they have to thread the needle here on making sure they've actually slayed inflation, but that the economy doesn't tip into recession.
So the long-term thinking then for the Bank of Canada is, and if you talk about this number in July as a blip, their path here, if you will, has been to say we're going to continue to cut rates. Do we ignore this?
I don't think they're ignoring anything. I think they're very mindful, and we saw it from their own discussions at the last rate cut meeting, at the meeting where they cut rates. They did take the softness of the employment data into account. They are mindful of that. The only question is whether they can look past this firmness in wages because we're seeing prices coming down elsewhere. And it may be that's the case, that because we're seeing big declines in other categories, it will be okay and they'll stay on the rate cutting path. And that's important, as you know, because although we don't expect to see massive rate cuts, we do have a bunch of mortgage resets coming in the next year and two. And so anything will help the people that are going to be reset at, in some cases double where they originally hit their mortgage.
We had a really interesting discussion the other day, speaking of these interest rate cuts and how it might affect the housing market, where people are waiting now, of course, to see these interest rate cuts come. And we're looking at maybe a couple before the end of the year and thinking, well, that's great. Then I can get into the market and think it's a good time to buy. When, of course, the flip side of that is if you're waiting to sell, you now figure you can get your price. You won't have to come down because there'll be more buyers out there potentially because interest rates have gone down. It's kind of a catch-22 here.
It is, and it definitely highly depends on which part of the market you're looking at, right? Because we've seen such weakness in places like condos, pre-developments. We've seen big dislocations there where people are selling at a loss or carrying at a loss. In the higher end of the housing market, it probably is still the case, would be my guess, that the the balance is tilted toward the seller. In other words, if you've got a house you're looking to sell, you're probably still in pretty good shape because the supply-demand picture is just what it is, right? We don't have enough single-family homes for the demand we've got. But I think you're right that when we start to see rates come down a little bit, you will see some people get back in the market. I don't think it'll be a flood because we're not going to see a decline in rates in a big way. It's only going to be, 0.25 here and 0.25 there, and it'll take us a while to get back down to anything you might call an inexpensive mortgage.
All right, let me move on from that and talk about temporary foreign workers, which that subject has come up before. But this time, and I don't think a lot of people have been paying attention to this, the government considering blocking low-wage temporary foreign workers. And I understand from having read the story, Amanda, there are a lot of fines that have already been handed out that we don't hear about from people, employers trying to take advantage of this system. Now the government looks like it's going to act.
Yeah, and let's agree. I hope they do, because if you're taking advantage, if you're abusing the system, that's bad for everyone. And it does seem as though the application. So if you want to bring in temporary foreign workers on the low wage program, which is what they're talking about, in other words, paying less than the prevailing minimum wage in Canada, then you have to apply for that and show through a labor market information document that you tried to hire Canadians, and people are apparently falsifying these documents. That, of course, should stop immediately. The last thing we want is to bring workers into this country that are treated differently than a Canadian worker would be. We already do it. The whole program does that to an extent, but we don't want to make that problem worse, and we definitely don't want to keep Canadians unemployed and bring in cheap labor instead.
So, I wonder if the flip side of that question, though, is, and it seems to be something that came up a while ago, employers who will look to you and go, you know what, I would love to have people here taking these jobs, but people here don't want these jobs to begin with, so I'm forced to hire a temporary foreign worker.
Yeah, I mean, the answer to that always, of course, is what wage are you offering? If you offer the right wage, you'll find a worker for that job. We have the course of that market logic by allowing this loophole of making the workforce global. So you don't have to satisfy the needs of your Canadian workers, who, by the way, really just want enough to live, right? If you pay somebody enough to pay their rent and their food and incidentals, they'll do that job. We're not too good for anything, but we don't want to take jobs. And so when we create this whole system, import cheaper labor, you're going to create a problem. And that's where we're at now. So, and the flip side of that, of course, is if you had to pay a tomato picker, a living wage, tomatoes get more expensive. And is that good for the economy? But it definitely bears watching, and I'm glad the government's keeping a close eye on it.
All right, last question real quick. Some numbers coming in this week. On the one hand, Air Canada lost $81 million in its last quarter, but Tim Hortons is firing on all cylinders. So what do you think?
Yeah, Tim Hortons really stands out in a crowd of weakness. Tim Hortons and Shopify did well as well. But in the restaurant business, we've seen terrible weakness, right? McDonald's and Starbucks. Tim Hortons is doing everything right. They've changed their menu. They're hitting it right with consumers. So good old Tim's is apparently where we will keep spending even when we stop traveling and even when we stop going to McDonald's.
All right, there you go. That takes care of it for today. Amanda, thank you so much. Appreciate your time.
Thanks, Aaron.